Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by today. Starting a little bit late today. Got kind of distracted by the market. How about that? Good morning. Morning Marty, morning everybody, and everyone in the Trader Lab, and those of you visiting in YouTube. Thanks for stopping by. Let's get into it right away. I do have to mention to you the blue jacket contest going on right now. You can win the coveted blue jacket, but also 3 months of Global plus data for either stocks or futures. This is going through the end of the month of February. Also, all you have to do is show your trades on Bookmap using so show your trades using either the dome or the one click in the Global Plus, so you can execute on the chart. It can be replays, it could be sim, it could be your actual trades. Just annotate them and send them in, and you will be entered into the drawing for the coveted blue jacket and 3 months of Global plus data. Pretty cool. All right, let's go take a look at what's going on. Big day today in the market. A lot going on. Major news event today. The Supreme Court has ruled that the tariffs are illegal. Now, what that will mean ultimately, we'll find out. But that is a substantially bullish event for the U.S. economy, in my opinion. It is basically removing a tax, in my opinion, again, and that tax is higher costs, more inflation, lower purchasing power for U.S. consumers, and that is potentially that obstacle to growth and wealth development in the U.S. is being potentially removed. Therefore, what does that do for the stock market? It's not a reach to go, this is a bullish fundamental event. And that being the case, it would suggest maybe currently that the long side might be the appropriate place to operate. And of course, that's not a recommendation. But if you consider the input and what its implications are, you might want to be thinking about the long side. When you remove taxes, and basically the tariff is a tax, and unfortunately those who pay the tax are the consumers, which is us. That lowers our standard of living and the rest of it. So it's basically we were being taxed. So if that's removed, whenever you have a lower tax, doesn't matter what your thoughts are about it, it's positive, because that lowers prices, which lowers inflation, etc., etc. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room, but if we get there, we'll talk. Now, I want to show you the higher time frame briefly, and then let's get into it. Now, these are RTH candles, and this is yesterday before today's open. Now let's take a look at what we see here. Substantial selling, continuation selling, short squeeze. This was Friday. Monday we were closed for President's Day. Continuation selling. So in other words, the shorts got squeezed in here, and so did some of those guys. Thanks for playing. They get a coupon to the buffet. Now what? Now this is market mechanics. The shorts that covered on Friday, what do they do on Tuesday? Monday was President's Day, don't forget. Continuation selling. So what happens if we start out down here? We get new sellers, and if we find too low, then we can squeeze. If we squeeze, now we have buyers in here, we have buyers in here, and now we have buyers in here. So what happens here? We open, we test, and there's buy stops here, and of course there's going to be buy stops up there. But what we are interested in is yesterday. So yesterday, what do we know? we hit resistance. Our target up here was around 25-ish on this day, 25.75, and I think it was, I don't know, 26 or 20 something, right in there. You'll see it right here. And that was the high of the day, and then we got our sellers. So the longs that came in over here when we squeezed the shorts, those longs, then what happens to them? They go under the bus. What happens to the longs in here and the ones that are still sitting in here? We go down. If we go down, now we have shorts. So now we have shorts here. Now let's look. Now when you look at this, doesn't this look potentially like a bear flag? What do you think? So let's go take a look. Let's see what it actually might be. Now I'm going to start showing you auction. In other words, this is what you all look like at with your candles. Draw your little lines or whatever you do, and it's all fine. You know, trend line, moving average, it's all great. However, let's go take a look at something a little different. This is the volume profile. Now, what are we looking at here? It's a big question. Actually, let me clean this up a little bit for you, keep it simpler. So here's what we're looking at. 45 is in this, all this volume represents all-time high, swing high, to our last low, which is down here. Now everybody does this differently. I just look at swings because where was the extremes? Extreme high, extreme low, who knows? Now there's a little bit more. Let me see if I can find a little bit more for you. Yes. I'm going to show you something else. So remember, this was our target day before yesterday. And this sets up, yesterday I was only on the shorts. You could trade either side. This is called value area low. If we open lower in range but out of value, that suggests we are rejecting this. Now this is market profilage, as I call it. If that's too high, we can sell it. So all day yesterday I was just selling, you know. And you could take longs, you could take shorts, you could do whatever you want to do. It's not right or wrong. So what I know is yesterday we closed right in the middle. That's kind of a neutral thing, wouldn't you say? And we're right in the middle of this value area. So this is fair. Now I'm going to turn another little thing on for you. This is called naked volume points of control, or high volume in the developing daily time frames. This is an intermediate time frame, so higher time frame. If that's too low, outside edge, and the retail price from this day might be too low, remember we don't know. If I come back here and test it and I get another leg up, might that suggest it is still too low? When I come down on this day, what do? We check it is still too low. So now what do we do with this? Too low, and now we do the squeeze. To where? Too high. If this is too high, what does it suggest? Rotation. Where to? No clue. This was my target yesterday. Now you have to understand, this was a target, this is a target, this is a target, and it didn't get there, came back inside. Okay, so what does that tell us? Well, the market's in balance. Now let's go and take a look as far as what that might mean for today. By the way, if you have questions, please post them. I'll do my best. I do have a little problem with the chat at times. Kind of gets away from me here and gets covered up. How you guys doing in YouTube today? You guys all right? Everybody conscious? Can I make Bookmap better? I will pay more for that. I know you guys can do it. I'm guessing. I don't understand that one. Bookmap is always being improved. There's a lot of things in the works, but as far as it's not going to give you an ATM, but it can, if you understand order flow and how to use a high tier tool, it might help you with developing an edge, which is what this business is all about. Let's get the Bookmap. Now, based on what we know, we have yesterday's low, and there's stops over here, right there. And we have, so there's, if we're opening in range, and I believe outside of value, let me just look here. Yeah, outside of value, that's kind of negative, okay? So if we open out of value, but in range, so we're opening lower inside yesterday's range. So here's some ideas for you. There's an 87% probability we take out yesterday's high or low. Who knows? There's an 80% probability to get to the overnight volume point of control. Now, what are these points of control? They are high volume. And trading isn't really complicated, you know. It is a bit random, so that's a bit of an issue, right? Let me see if I can. Okay, here's the overnight volume point of control. This is yesterday's value area high, value area low. If I come inside, then I have the possibility to come across to the value area high. That's one piece. The other piece is yesterday's high volume. Now this is multiple time frames as you think of it, though I don't specifically use time as most others use it. Time does have some, let's just say time is material in certain respects, but mostly it's not. At certain times it is. This has a naked volume point of control, which is what this is called, the previous point of control, 68% probability. Let's see what else. There's others, but this will work. Now, notwithstanding, we have a fundamental input that disrupts the auction. This level here, the 82, was a level from the ETH where we had two distributions. In other words, in the ETH, we have this, too high, too low. This is the retail price. That's the overnight VPOC. And if we fall out of it, then we're trading lower, and this is too high because we rejected this. So starting out, I know this is an outside edge. I know that's also an outside edge value area. I know that's got 80%, but if I can't get back here, I can rotate. That's what I know. Now, let's go take a look. Now, I'm going to show you structured trades. Now, the important thing to know about structured trades is to know that these are time frame specific. So higher time frame traders might get long and still be long. Other traders are going to trade rotations, and as day traders we are pretty much trading rotations unless we trade a higher time frame in the daily developing time frame, which means then we sit through counter rotations and we have the possibility of giving a lot of open trade equity back. And psychologically, you know, you got to be okay with that, or else you're not going to be a happy camper emotionally. So you have to find in trading what aligns with your psychology and then build a plan for that. And we're all different that way. Some traders trade very short-term rotations. I don't. I trade larger rotations, but I don't try to stay in for the whole day unless I have a reason to. And today, 45 is the target, and that's not a recommendation. It could do anything. So let's go take a look here. We have a high probability of taking this out. And by the way, yesterday, this was a target coming down. And so, this, no clue about this, but this was our primary target, and then as far as we go. So today, if it's too low, and if I get down here, because I have a high probability, then I can look for what's below, and maybe we'll get there. So what is below? Well, I got that 26 out here, 27 that I said was a target. I also have resting liquidity, which is down here. So, you know, if I'm doing anything in here, I'm looking at yesterday's low because there's stops there, and I'm going to look at this liquidity as an area to observe. Anyway, just saying if I took a short. Now let's just look at the trades, see what happens. Okay, and we're all clueless. Watch. This is called developing volume point of control. Now, these are early trades. I always say any trader who tries to trade these without having vetted them is just gambling, and this is the last place you want to trade because this takes the most skill. It takes a lot of skill because there's no time. There's no structure. So you're really operating on, it's kind of like a shoestring because there's nothing to work with. So you really have to be competent and also comfortable with the risk like we always have to be. So right here, this is where the sellers are. This is where the buyers are. Variable high volume node. The yellow line represents the volume. So if you want to think about trading, it's really shopping. So let's get over this complicated thing. It's not complicated. It's random. So we really have to change what our rationale is for the behavior. Gee, it's really hard. It's really complicated. How about it's not? It's really random. That changes it. Because randomness and complexity are not necessarily the same thing. You need to accept randomness to be in this business. Not try to you can't take randomness out and you can't create certainty. Let's watch. So what do I know? Resistance, support, break here. This is an extremely aggressive long. If you can take it, watch. This is the new retail price. Let's just watch the behavior. Now, there's more. And again, these are not trade recommendations. This is all about structure. The idea of auction market theory is to understand what this says. This is language. So if this is too low, this is too high. So it's resistance. Too low, too high. You can see it. Too low, too high. Absorption, absorption. Sellers are here, buyers are here. I don't know. What do you think? I don't know. What about this? That's too high. There's the sellers. What about this? That's where the buyers were. It's too low. There's the retail price. So right now it's support, support, resistance, resistance. What's happening here? Break high. Now you have a long, and let's watch. Now there's another piece to this. What do I remember? I have sell stops under here, and it's close. So where might this go? Well, I'm going to say, of course, I could do anything, but what I'm really looking for is a short. Let's see. VPOC migration. Going to the moon, Alice. What does this say? I don't know where that came from. That's something. Variable high volume node. This is now support, right? And what is down here? Support. Support. So we got support. And now this is our new variable high volume node. What do we see? Let's look at the language. What we see is markets moving higher, volumes moving higher. Think of it like your store. If there's a retail price and people buy it, and they raise the price and people still buy it, price can keep going higher. What happens if we find a price somewhere that is too high? The buyers are going to go, I don't think so. And we might return to a previous price. Where were we trying to go? Wasn't it there? So let's look how this might work. Notice the change in behavior. This is what's really important. This is language. So when this happens, I know the following. This is too low. This is too low. If I rotate, we have a structured trade in the Trader Lab, and this is never a recommendation. Don't forget, my idea would be to go here. But this says long. This is called mean reversion, and it's VWAP to VPOC. So that's a long if you want to be long. Now for me, I see this and I'm going, I don't want to be long at this point because I want to be looking for short. So I don't know, where anything's going to happen. But this is my support. There's a sweep. Looking for continuation higher. Looking for a short. Don't have one. Support. VPOC migration. Going to the moon, Alice. See the support? Support. 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 Higher. This is either support or resistance, isn't it? It's based on the behavior. Support, new retail price. What has to happen? That to continue higher. What happens if I break under here and under here? Trouble. Let's see. Trouble. Why? Look at the language. Too low? I'm not paying that. Seller. Seller. Now you don't know until you break away. When you break away, you could sell this, you could sell this, your stop's got to go up there, and you're looking to take the opening swing low out. Why? There's sell stops in here, they're sitting right there, and then you got this where there's more stops. Is this logical? Target. Now, no way to know. Okay, so let's look. Come down. Now, this is the target, don't forget, because we know there's stops below yesterday's low, which is there. So I know there's stops there. So when I put a trade on, I like to use what I call fuel. What is fuel? Fuel is the other side of the rotations. Now, this concept of fuel, because years ago I built trading systems. You guys know, I mean, when I mean years ago, I mean many years ago, like late 1980s, 90s. I built systems because I was managing money, and it was across asset classes, and it was trend following. There was no day trading. So, but what I built, one of the systems I built was based on stops. And it was based on trading into stops because that's liquidity. Now, this is way back in the 90s and the 80s, late 80s, mid 80s, actually. Now I think about it, I think 87, 80 in there. And I was already trading 7 years by then. So I kind of, after getting thrown under the bus and stops and the rest of it, I started, looking at why does the market have its behavior. It's because of rotations. So intraday, or whether you're a position trader, the market still is going to go into the stops. So for example, I know there's stops here, I know there's stops there. Why wouldn't I trade towards the fuel? Now if I get the stops, there's also the possibility, again, that there's going to be buyers here. If I get below here and I don't get continuation selling, and I thought this is where we might go, by the way, then I can get my buyers. Now right here, I get a counter rotation. What would make me think to get out? Let's look. Right here. So I get continuation sellers. So far, so good. Outside edge, and I'm looking for it to come down here. Now, the thing to also look at in the volume is only 13 contracts went off down here. So what does that tell us? If there's only 13, is it possible we have exhausted? I don't know. What do you think? Let's watch. So right here, so this is where the sellers were. If I come above here, then I want to be out of this thing. Now, this is called VPOC migration. What does it say? New retail price, and this is too high. So now what I have is maybe too low, no way to know. I have new retail price, maybe too high. So if I'm looking at this, I'm thinking possibly continuation shorts, but I have to get outside. So let's see. This is a short for me. break low, so it's risk neutral, pull back to developing volume point of control. This is resistance. Look at how this might work. Resistance, break low, too high. What do we know here? This was too low. You break under it, it becomes resistance. This, now different time frame. This drops down. What is it? Support. What is that? Resistance. Then what? Break low. Where are we going? Maybe lower. I don't know. What do you think? Resistance. Break low. Having a good time, Lewis. What do we know about this? We know our buyers are here, okay? Absorption is here. Buyers took control. See the change? So when you see this, okay, you know, this is like, but this combined with taking this out is a higher rotation. That's change. And you can see the buyers. They're right there. So where were the buyers? They were right. This is where the sellers were. Right here. Why? Sellers are here. Sellers are here. Buyers are here. No clue. Sellers are here. Buyers are here. No clue. Break high. Teeth chatter right here. Pull back. Come over this. Trouble. Now where's your support? It's here. It's right there. Why? Because the sellers are here. The sellers are here. The buyers are here. Buyers are there. Buyers are there. Buyers are there. Buyers are there. Break. Clueless. Break. Trigger. Now trade management off. And then subject to. This is a long or it's nothing. Now watch. Where's my resistance? It's here. VPOC migration. Support. Resistance. Break under here. Too high. Support. Resistance. Support. You see how I'm using it? And I don't know, by the way. The knowing part doesn't exist in this. Just saying. Then what? This is resistance. So we got the stops here. This is too high. I get my sellers again. I'm at an outside edge. Now, this sets up something called mean reversion. Oh, that's nice. Thanks for posting that. So this is the outside edge. This sets up something called mean reversion. It has to qualify, and this is what mean reversion is. It's outside in trading and then potentially out the bottom, just so you know. So the idea of this is to come back to an area that was too high. This is called an outside edge, low volume node. In other words, think of this like this. This is what this is called, and this is a balance area. And a balance area is like, oh, I'm not paying that. Retail. And then, oh yeah, but it's on sale. So in balance, we have, it's called mean reversion. So this is the mean, and it's outside in trading, which is what I believe every trader needs to learn. Support, resistance. You can see why. Support, resistance. Let's see what happens. Takes it out. So now if I can't get back under here, then I can come back here and there. And if I come out the top, then all bets are off. Notice where we hold. Now watch. Notice where we hold. Notice where we hold. So this is a long. So if you're taking shorts here, you might get stopped out or you might get risk neutral. It doesn't matter. This is just trading. Outside edges here, you can see. And then we came down, did not get back here, did not do any of this. If this is too high, then that. If this is too high, then that. If we break high, there's buyers, then where was my resistance? It was there. And you know the old saying, resistance becomes support. And the other part of it is I'm now above here, which was my outside edge. So if it's like this, if we're doing this kind of thing, and then I break away from it, if I return to it, it is now support. So I have support, support, support. So if I take a long, I got to be down here with my stop. Now let's look. Value area low is a target. This is a target. You could scale here. This is support. So if you're long coming back here, you might scale. If you got long, now you're going for statistical targets. And where are they? Good question. Where are we trying to go? Yesterday's VPOC, which is this. This is a target. It's about a 67% probability. Now, let's look at a couple other things that are going on here. Now, this is quite extreme. You know, you look at this and you go, what? So, but this is the target. So for me, when I'm looking at this, all I want to do at this stage is get long. So the only way I get long is something called mean reversion. So this sets up an outside edge. This is called mean reversion. You got to be aware of the stops that are sitting under here. If you were in the idea of reversion trading, this is the opposite of the shorts. It's to come outside and then come back here. Okay, so this, no way into it, just so you know. But now we have stops here and we have stops here, and we have this thing, you know, which is looks quite extreme. So let's see what it does. This comes out under the outside edge, which is our low volume area. We have stops there and there. So we clean the stops. Now, here is our outside edge. The idea of mean reversion trading is only outside in. So if we think the trend might be up, which, you know, up maybe, then it's only longs. So this I would not be able to do anything with. This, yes. Right here is where the stops are. Under the swing, and here. Once this happens, I know there's going to be stops here, and there's going to be and there are stops there. Would you enter knowing that there's sell stops here and now here? And now you have liquidity come in, which is equal to this liquidity. If I break below it, I have the next level, and I don't know, it could just keep going. When I break above it, I now have this. And it's in alignment with what? Outside edge. This is called mean reversion. So there's no way, I can't do anything with this until that. There's my buyer. There's my pullback. My entry is anywhere in here. My stop has to go out here. And then I'm trying to go here. This is mean reversion. And then the idea is for continuation, 67% probability. Who knows? Let's see. And where's my support? Isn't it here? Stop is under there. So long. So what you do is you get the long to there. You get this. You can go long to there, to there, These are structured trades. So all there is, depending, unless you're a counter trend trader, and this is another target, and value area high is a target, right? So this is called a value area trade. We came across the range. Now, and this was our resistance from the ETH. Remember, all this is part of it. Let's watch. Now, 80% probability to get there. This, no idea. But ETH high, and there's more. So let's look. Watch. Now for me, now this is the VWAP and mid to VPOC. It is a structured trade in the Trader Lab. Up to you, whether you take it or not. Let's look at something else. This will make it interesting for you, because what you're going to see me do, which is the same thing I do every stream, is process. That's support. So longs, and this is where they came from. There's the buyers. So I know buyers are here. If I pick the stops, and this is very important, always look left, because the buyers are here. But what else is going to be here? Sell stops. Remember my trading system. What do I want to do? I want to use the stops because I know they are there, right? So if I know the stops are there, then maybe the thing to do is not put your stop with the rest. Use the stops, and then if you see absorption, then you can then take continuation trades in alignment with the trend. Now, what do I know up here? Let's come from the other side. I got resistance sitting here. So if I get long, I have a couple of things I can do. I can try to scale here, or I can try to go there. Volatility really kicked, huh? Yesterday's high, resting liquidity over here. Not a bad place. ETH high to get out of Dodge. Volatility really picked up here. Let's see. I think. Okay, let's look at this. VPOC migration. This is too low. 940. I'd like to speed along here. And what we're going to try to do is go for the first hour's high. But that's set at 9:30. So at 9:30, which is here, wherever the high of the day is, that becomes a potential target. There's over 90% probability to eventually take this thing out, which is this. Okay? So let's take a look. This is where the volume point of control is. So this is a target, this is a target. Notice the behavior. If you get through here, this is support. If you don't get through here, potential trouble right here. So this is an exit, or this is an exit. This can be a counter trend short to there, or I think this is a long we talked about. I can't remember anymore. And the idea of this long would be to come back here. And if it keeps going, it keeps going. If it falls back under here, then you're out. So what we got going on here? Well, see, the market is selling. How about that? Picture quality is poor in Discord. Well, yeah, Greeny, nice work. 82% win, profit factor 2.93. Look at you. Nice work, Greeny, on the mean reversion trade. It's the most common behavior uh, every day in the market. Even in a trend configuration, mean reversion. So I believe traders who come to Trader Lab should always focus on the primary trade, which is the rotational trade as day traders, which is reversion. So all of this is reversion, this kind of rotations. Now, VPOC migration. So now we have what? Let's look outside. We have low volume area here. So possibly if we come outside, we can come back there. So the trade is reversion trading. Now, what else do I know? I know I got stops here. So remember the concept. Where's the stops? There, there's the buyers, and here. And there's your sweep, I believe. Is it? Let me just look. No, not a sweep. Come into liquidity, come out to the VWAP, and it sets up a potential rotation. So that might be a long for you, might not. It's all part of your plan. Now we have VPOC migration. Now we have support there. You see the liquidity come in right here? This. And now it comes back in the book. These are buyers. See the icebergs? Now, if I understand order flow, and I understand that we're rolling outside to an outside edge, and this is the fair price, this is still mean reversion. And it's mean because we don't know exactly where this outside edge is until hindsight. So this is a trigger. This is an obstacle. And then you'd be trying to go higher. That's basically what you're trying to do with this thing. This is where you'd be scaling. Me, at least, I would. If I get here, I'm going to go here, and I know there's heavy sellers sitting up here, and the selling has been happening right here, right? And notice how this thickens up. This is so the order flow can be very useful. So if I get long here, I'm going to scale here. If it's in my plan, that's a nice range for getting risk neutral. Stop goes under here, and then here, and then out the top. But here's the thing to understand about this. That's a lot of liquidity. I mean, 127 got added over here, okay? And I've got this also sitting in here. So I know there's a lot hanging in here. Think of Pac-Man. For this to go higher, the buyers have to consume the sellers. If we run out of buyers and the sellers are still hanging out, what might happen here? We may counter rotate here and do whatever. The whatever is part of the thrill. Rotate, breakthrough, more liquidity. Now for me, there's no shorts currently. There in this, it's longs only. So all I'm going to be doing in this current condition is buying outside rotation. So out, back. That's it. That's all there is. I'm sticking to it until it doesn't work. Notice the liquidity. Now there's no way to know where the high of anything is. I've never figured it out. It's not part of what I do. I don't have that skill, so I don't do it. This sets up a long right here. This set up a long. Let me show it to you. First of all, we have to look where our stops are. They're under here. They're under here. All right. If I'm trading reversion, it's about coming outside. Now, the hard part of this is where's outside. Maybe it's there, right? And this would be a place I would look for a long. But I've got full session VWAP. Let's look what else we have here. Let's zoom in. So when it's coming down, I'm looking at this and I see my buyers are sitting here. I break through them. I get a sweep, which suggests a counter rotation. If I took a long here, I got to get scaled ahead of that. Just saying. If I come out here and I get VPOC migration, and this is not necessarily a long, that's my obstacle. Notice the behavior. This is the thing about the auction. This is support. See the support? That's resistance. Break below it. This is resistance. Break high. Hold it. This is now support. I'm sorry, resistance. Too high. Break low. This and this becomes resistance. This. If I sell this, I got this. Or if I only want to get long, I'm not doing any of that. I'm just managing my long that I would be in, and this tells me don't get long yet. It's telling me, and I know, what else do I know? There's stops. There's mechanical VWAP buyers, and they have the right to a winning trade. Thanks for posting that. So 11:45 Central Time, 12:45 Eastern Standard Time, President Trump will hold a press briefing. Well, I would suspect there's going to be a lot of volatility and maybe outsized risk. Follow your plan, guys. Right here's resting liquidity. This sets up right here a potential long. Full session VWAP. Change in behavior right here. This is the outside edge. This is where the stops are. Markets often, they don't stop here. They come outside, and then if we come back, then we can mean revert again. And for me, it's only longs at this point. Where am I trying to go? Here. Mean reversion. And then resistance is this. Here, let me mark it. So the way I do this, and I'm just saying it's a way, you know, I'm not saying there's a right way. I'm very much, I'm doing this 47 years. I'm not going to tell you ever that there's only one way to do anything, or even a right way. The answer is in your metrics. The randomness is always going to be there. That means you're always going to take stops. You're always, whatever happens, happens, This is a target. VPOC migration, support. And what was this, right? Resistance. See it? Here, let me put a little line in here. See how this might work? So outside, back to there, up to there. Trade could be done. If I get VPOC migration, this is now too low. And I have sweeps here, which suggests upside. Break high, next resistance. And again, none of these are anything you guys need to be doing. What else do I know? Right here, this is now support, microstructure, and a order flow trigger. Next resistance up here. Where's my support? Let me draw it for you again. Now this is all order flow and auction related. I've combined them. So and the idea of this is I don't use indicators in the way that most of you do or have, I don't use any of those. I use the auction because I'm interested in staying aligned with the participants, not some math-based average of something. What does that do for me? I need to see it here, not what's happened back there. I need to be here because I'm trading in the present. So that's too low. This is now retail. If it's too low, I'm going to go to the next place. I've got this. This is an obstacle. If I break over it, it becomes, here, let's look at something similar. Now, none of these are predictive. They're just locations of, I call them areas of interest. Resistance, break high, support. Where's the next one? here, resistance, break high, resistance. What is this one? Support. What is this? Resistance. Break high. What is this? Support. What is this? Support. Break under it, resistance, support. Notice the liquidity comes back in the book. Support, resistance. Get long, got a scale. Get long, got a scale. Get long, got a scale. Long, got a scale. I don't know. What do you think? Does this look, can you read it? Now what? Watch. So what is this? Resistance. Support. Get above. Fine. Resistance. Watch. Now, no clue, by the way. Would love to tell you. I have no idea. So, support, resistance, break high, support, break down, support, come up, looks like it's going. This now is support, support, break low. Notice the test. This is the change is here. This is now support. So, resistance, support, absorption, icebergs, break low, resistance, resistance, potential short or exit, outside edge. This is where, if we're going up, we're doing it right from this area after we take these guys out, the stops, right? There's this. So support, resistance, see? Support, resistance, support. Sorry, Tom. Exit or short or nothing. And where are you trying to go? There. That's reversion. Now, I don't know what else is going on here. What's this? Retail price. Break low. What happens if it shifts down and this is too high? Short. That's a structured trade. And where did it come from? Let me show you. So, don't forget, this was important. This was resistance. We broke above it. We held it. We had a sweep. This is resistance. So support, resistance, break high, support. Break under support. What do you do about that? Get short. Resistance, resistance. Stops are under here. Break. Order flow. This was, what was this? Look over here. Notice where the liquidity is. Notice where the liquidity is. So this sets up your long, okay, but what else do we know about it? If I can break below it and I now have a location, I can sell this or do nothing. Again, these are just trades you can learn in TraderLab. Not saying they're any good. And what's sitting over here? An area to scale or whatever it is you're going to do. It's just what, there we go. So now let's come back and look. We back inside yesterday's range. We have support down here. We did not take out the first hour's high, as far as I can tell, and we have the first hour's low over here. We have to see if we get under here, things get sticky in the wicket. Let me show you. This is today. So we came up here. We missed taking out yesterday's high by a touch. We came up back to this outside edge. Who knew? The idea is to go to 45. If we don't do it, then we can come out the bottom and all the longs get thrown under the bus. Remember how the market works, it rotates. And if we get under here, unless we find buyers, then this puts that 28 back on the hit parade. Not or this. So I had two targets for shorts yesterday. This 32 and 28. So those are now back on the hit parade, not a recommendation. It's just maybe, maybe not. They're just levels. They're not anything more than that. So what I do, and it's up to you in your time frame, is I just trade rotations. So since I'm a day trader, I'm just trading inside of this behavior. I'm not predicting it. I don't know what's going to happen. So I'm way past that. You know how we always try to be right and we say it's going to do this, it's going to do that. I have no idea what it's going to do. So that relieves me from needing to be right or my ego, protecting my ego or getting myopic. If I put myself in a mental state of being clueless but not ignorant, what it does is it allows me to stay flexible because I'm a day trader. Isn't this all about flexibility? Outside edge, resistance. Now I can trade anywhere inside here. My stop should be outside or whatever I deem appropriate for my plan. Stops are here. Resistance is here. Let's see what might happen here. This is a micro trigger right here if you're inclined, you know. And you could see it. Let's just look at this over here. Let me look. Yeah. Absorption here. Sellers are here. Break of microstructure is right there. And it sets up a very short-term aggressive short. Where it would be trying to go is only there for scale. So it's rather what you might say a minimalistic approach. 1 second. One moment. So let's see what kind of behavior we get up in here. So, follow your plan, guys. This is our outside edge. Let's see what it does. These are not trade recommendations. So I can anticipate it. I can't predict it. So depending on my plan, I just wait for it to come to a location. This is an outside location. And this is coming from over here. And they showed up again. So this would be an area to observe to come back possibly down here. Not a recommendation. It could do anything, right? Are you guys able to hear me? Did I fall out of Discord? Having a little technical trouble here with Discord. Guys, use the link in the Discord Trader Lab, and you can watch this on YouTube. Discord, let me see if I can fix Discord here. Um, Let me know if you can hear me in Discord. Maybe not. All right, I'm going to close Discord, guys. I'm going to stop streaming on here. So this is your location. Sorry about that. I was distracted. This is the location for the short. All right. You can see this. And by the way, when I'm saying short, long, this is time frame specific. Other traders are going to be long from out here and just sitting through the rotations. So what I'm doing here is I'm not suggesting how anybody trades. I'm showing you market mechanics. When you understand the language of the market, you can then create a trade plan that is in your time frame so you can interact where it fits for you. You might need large rotations. Now this is, over a 10-point rotation. I can work with that. If you think the trend is up, then I'm still getting trouble here with Discord. Sorry guys, trouble. So if we think the trend is up, then you might not take the shorts. You might use the short as a trade management opportunity. See where it came back? This is resistance. Here, let's look at it a little closer. And by the way, did I just see ignition algo? Yeah, this is an ignition algo right there, which is pushing. See it? You're not familiar with ignition algos? It's always nice when they're pushing, and if you're short, you want them pushing your way, not going the other way. So resistance, resistance, resistance. Here, let me draw it again for you. I draw these little things because I don't want to forget where there was behavior. So when I return back to it, I then stalk. In other words, I look and I go, well, okay, I got absorption here. I got a trigger right there. I can come back and test. All right, break again. My sellers are there. My sellers are there. Notice the algos, ignition algos. If you're not familiar with this, there's tons of information about this in the knowledge base and in the courses. Okay, break low. What is this? Too high. You see? So this sets up these rotations. It's not necessarily a short because this might be counter trend in your time frame, right? And you could trade any side you want as long as you have an edge. It's not up to me. That's up to you. Let's just watch what happens here. This is coming down. Let's watch. Now, if we think the trend is up, then, you'd only be looking at longs. If you want to trade both sides, you could do whatever you want to do, but you have to always use trade management. Notice the liquidity here. This is algorithmic behavior. See how this is doing its thing? Now, it doesn't mean the market's going to go down from here. It can mean they're just pushing it so they can absorb on the other side. You can't use algo behavior to trade off of because it's, this is just a computer. All right. What you can do though is, at least what I do, is I'm more interested in the stationary liquidity and then what comes in back at that location, like here. And the fact that this pulled and it dropped there, that suggests something to me. It doesn't predict anything that doesn't exist. It suggests there's potentially pressure. So then I can just look at this, and then I have trade management that is somewhat mechanical, that's based on structure. And then either this pulls and up we go, because I think you might say the trend might be up, but we're rotational. So it's just time frame. Notice where we're testing. Let's see what it does. Isn't that kind of interesting? How are we doing in YouTube? Guys, what is important about this in the Trader Lab, it's not flipping and flopping. What it is alignment and understanding the condition of the market. I understand that we have a bullish event, and I also understand that we have over 98% probability to take out the first hour's higher low. My inclination is the first hour's high, but look where I am. And I have sell stops under here. Did I already get the shorts out? And that means now I've got longs who are now on the hook. How do I slice this up and align with it? Do I want to be a seller in what might be a bullish environment? And this is still laying out here, this liquidity. It's still in the book. There's over 98% probability, take out first hour's higher low. Do I want to be going for that one? Or do I want to go for this one? And it doesn't have to take out either, naturally. So is the trend up? Then I would only take longs. If I'm trading both sides, I could do whatever I want to do here. I always suggest to developing traders, you pick a dominant side and you want to stay focused on one side. What side is it? If it's the long side, then you're only going to take longs and use short for trade management. That's it. And you just take your piece. If you're counter trend, and I suspect the trend is up, just me, doesn't have to be, in my time frame, then I only take longs. If I'm counter trend trader, I take shorts, knowing that the trend is up. So if I'm a developing trader, other than the counter rotations, which, make your jaw go on the ground and you go, what's going on? That's what I do. What's happening? Then I'm only going to take one side. And I'm going to use this kind of stuff for trade management or scales, because I anticipate that the sellers that are here are still going to be here. Now, I need to clear this to continue higher. That's what I know. And I'm at an outside edge. So all this volume that you're looking at is right here. So if I find too high and I can't get outside of this, I'm going to rotate down here. That's what I know. Does this make some sense? How are we doing in YouTube? Master Chief, the ignition algo, you can see him. I think he's covered up. I don't remember where it was, but if you just go back and look or review the streams, I don't really discuss them too much. The easiest way is go to the knowledge base in Bookmap and just put in their ignition algo, and you'll see examples of them. I'm going to try to get back in Discord. I'm getting a special request. So let's see what I can do. I think I'm back. Very two-sided, very rotational. Yeah, I'm seeing Doug just posted in the lab that Trump is about to speak about the tariffs. So, subject to your plan, there's potential fundamental input which can disrupt the auction and create potential risk that might be outside your parameters. Remember, stops don't limit losses. So up to you whether or not you participate or get back in the Barca lounger and let the dust settle. That is trade plan specific. For me, I'll tell you just me, and it's not a recommendation. If I know there's an event, whether it's an economic report or a fundamental input that can disrupt the auction, remember, the market is responding. Hold on a second. Well, congratulations, SDE. Um, the first successful trade following Trader Lab process, scaled and let the trade do its thing. You hit your target. Congratulations. It's very hard to do what is unnatural for us in this random environment, and that is to hold trades because of our fear. You know, guys, I always talk about psychology, and you can learn how to trade, in my opinion, if you come to Trader Lab. Um, Managing your psychology and your fear and your FOMO is going to be your greatest obstacle. And because in order to be successful in this business, you have to be able to control those impulses. And that's exactly what they are, an impulse. Your brain can't separate this business from you being in danger out on the street. And it basically perceives uncertainty as danger. So that response is there to overwhelm your intellect or consciousness and protect you. So it's doing a job of protecting you, but unfortunately in this environment it doesn't protect you, it actually takes you out of the business. So we have to understand that we're going to have these responses because they're wired, but we have to anticipate them, recognize them, not respond to them. Just follow a plan. So you need a plan so you know what to do. If you don't have a plan, you're just making it up as you go. That is not sustainable. At least what I've observed over 47 years. So I don't have, if you don't have that ability to deal with randomness, then trading won't work for you. We can't squeeze the risk out or create certainty. The only reason we get paid is because we accept uncertainty and we learn how to operate in it, not change it into something that we're comfortable with. Can't be comfortable with uncertainty, can you? You have to manage that emotions. Can't get rid of them. I tried for many years willpower and even behavior modification. It never worked. I could not overcome these very strong primal emotions. And I didn't understand them way back early on when I started trading. Oh, I didn't understand anything. There was no literature. There was no internet. There were no PCs. And there was nothing. You bought a book, you know, or went to a seminar. And I bought all the books and I went to a few seminars and I threw the dollars away on the seminars, and based on the books, I don't think I learned very much out of most of them. So that's all I can tell you. I did learn some very good stuff from Peter Stottlemyre. Um, and basically, I was doing some of it already. That's the auction and market profile, but I didn't have a complete understanding, especially in multiple time frames. So that was very useful. And I still couldn't trade with it early on because I was still using indicators and systems then. So I ended up, what I tried to do is the same problem, which was put another random input into the mix, which did not create more certainty or edge. It actually just created more noise, which is the same thing I had before. So it didn't change anything. So what a lot of us tend to do is, because we're looking, obviously for profit and to do better, we think it's more certainty. Well, what happens if you can't get any more certainty no matter what you do? Then you have to figure out how to operate in 100% uncertainty. So that's what Trader Lab's about, helping you understand the business. I can't say it'll solve things for you because it's going to require more than you've probably ever thought. Because this is a foreign environment, so it's very difficult to operate. It's not difficult to trade. It's difficult to operate in randomness and develop the discipline to accept the random outcomes. In other words, taking the stops. It's going to happen. Getting one ticked out of a trade. Going to happen. Getting your scale missed by one tick. Seems like they've got a label on my back. Happened to be twice yesterday. It's like, come on, but that's part of the random distribution. When it happens, you respond to it. But it's also part of the random distribution. Now remember, what's the trend? Up. Where are we trying to go? 98% probability, take out first hour's high or low. Where are we trying to go? North. Are we going to go down before we go up? We're going to rotate, that's for sure. Where's our next place? Here and there, and then out the top. And 45 is the target, by the way, remember? Where did that 45 come from? Where did that come from? Here. This 45 is the highest volume. Let me make sure. From here. It's the highest volume, and the market tends to rotate around high volume in all time frames. Well, if I can get through here, what is left? That. And what about yesterday's high? Do you think we're going to leave that? I don't know. What do you think? Don't know. And this was my outside edge, so this is resistance. This was the target on this day. You guys remember if you follow the stream. Well, are we going to leave this? Well, I don't know. I suspect not. And if we can get going here, that's 45. So you can write down 45. It's not a recommendation. It's sitting out here. Are you guys following? Hope you're getting something from this. Very interesting day. This is what makes trading what it is. It's random. It's different every day. Anything can happen. All you can do is have a plan. Your plan covers what the behavior is. It does not predict anything. All our plan can do is try to keep us in alignment and take trades where we have an edge that we have vetted. Outside edge is up here, So this is what we're kind of doing here. We're going too low. Now where's too high? It's got to be out here somewhere. And then we're in a rotational thing. But what's the drift? Up. So subject to your plan, what might you be doing? Buying counter rotations, taking stops like the rest of us when we get out of alignment. What happens if you buy it right here? Well, if you don't get risk neutral, you're going to take a stop. What happens if you buy it here? You get risk neutral and you're still in the trade. What's the difference? Here's the answer. It's random. So what do you have here? liquidity, resting the book. We can see that with order flow. Why are they sitting in there? They're buyers. What are these guys? Sellers. What might you do with this? If we have a 98% probability, why do you think this is sitting here? Here's why. You have yesterday's high, which we didn't take out. Shorts have their stops there. And why are these guys here to sell? Let's think about this. Why would they want to sell here and not way out here? Because there's going to be buy stops here. And if they want to sell, they need buyers, right? So when the buyers come in, these are going to be limit orders. The buyers are going to be stops, which become market orders. A market order needs a limit order. And the other part of it is the liquidity is going to be the stops. If you don't even know what's sitting up here. Thousands of orders, who knows? They need the liquidity, which is going to be the stops. Does that make sense? Now, if you take the concept, yes, previous high. If you take the concept of fuel, what does the market do in all time frames or rotations? Same thing, just different terminology. It takes out the fuel. Now, we don't know where it's going to stop. This could be a long, that's resistance. If I break here, that sets up a short. There's support. If I hold here, which I have no clue, this is resistance. There it is. Now, if I don't take this out and I cross here, what is this? Right there. Let's look. Can't be drawn all these things, but maybe you'll get an idea of how I organize information. Come back here. I think I lost where it was. I think it was there, but I don't remember. I think it was here. Resistance, resistance, break high, support, resistance, break high, support, support. If I can get high, then I can have support. Break high, support, support. Why? It was resistance. Becomes support. Resistance. Becomes support. Break low. Support. Get above here. There. I hope that makes some sense. Anyway, this is Trader Lab. And this is available to all of you. There's a link in the bottom of YouTube if you're interested in the lab. It's a portal really for an advanced trader methodology, but it's not complicated. What's complicated and difficult for us is randomness, and you definitely need to separate the two. You need to learn how to operate in randomness. And this is not a place you will be comfortable until you have metrics that show you that the trades you take over time in a random distribution of outcomes actually have a statistical edge that favors you. Then you can separate yourself from life and death emotional states on the outcome of one trade. Everything is random. The distribution of wins and losses is random. Statistical edge means over time the dollars will cross the table to your side versus you paying the gamblers who sit on the other side of the table. This is how gaming works. If you're interested in learning about the business of trading, use the link in the bottom of YouTube. Sorry for the technical issues today. Just lucky, I guess. Please leave a like if you're in YouTube. Support the channel. Use the link down there. If you want to visit Trader Lab, there's no cost for it. And I'd look forward to meeting you there. Have a great weekend. Thanks so much for all your support and for visiting Trader Lab today. Look forward to seeing you guys on Monday. Trade safe, manage your risk, and develop a plan. If you don't have a plan, you're sitting with the gamblers, and that probably is not the path to sustainability. Thanks again, guys. Don't forget to like.